of that $100 billion OpenAI investment? What would it mean, if anything?
Well, I mean, I think it shows you how the world has changed from September, but we kind of know that, right? In the sense that there's a reason Oracle stock is down over 50% from its 52-week high following that monster quarter they put up in the middle of September. So I think, what will be interesting is what the amount ends up being, because remember when that agreement was signed in September, it was for $100 billion, but it was a letter of intent. So they didn't necessarily need to follow through on that. And you saw in filings from Nvidia since then that they said, this might not ever get done. The CFO, CEO have said that in conferences starting as early as January, as far as I can remember. So this is not, in some sense, new news per se, but it does tell you that Nvidia clearly thinks a lot differently about OpenAI than they did in September of last year.
And what should, we were just talking about this, what should OpenAI do, Dan? I mean, you don't have to worry about it, I guess, because it's not a publicly traded equity itself. But if you're a Microsoft investor, if you're Oracle, as you mentioned, in some ways, if you're Nvidia, I mean, those are the chips powering their chatbot, whereas with Google, they have it kind of all vertically integrated.
Well, yeah, but Google does use Nvidia chips as well. So I think this comes down to what's been happening really since October 29th, before that 5% drawdown in the S&P back then, where if you look at the Google ecosystem of companies since October 29th, they're up about 25%.
Yeah.
If you look at the OpenAI ecosystem of companies, they're down about 25%. And some of the latest releases from Google just make me feel that much better that Google's going to ultimately be the winner in consumer AI, and Anthropic is going to be one of the winners in enterprise AI, and OpenAI is in trouble because they're wedged between the two of them.
Okay, so let's stay there. OpenAI, we don't know if it's in trouble or not, but if they don't get $100 billion, even by OpenAI standards, $100 billion is a lot of freaking money. Okay,
no, I think they're going to get $100 billion, Brian. I'm not saying they're not. I'm just saying longer term, if you are thinking about who the 1 to 3 winners are going to be in AI, I don't think they're going to be one of them. Are they going to raise the $100 billion? No problem. There's too many companies that have a vested interest, at least for right now, for funding. And so they're going to raise the money. It'll be interesting to see what happens to the stock prices.
They'll raise it and they'll burn through it, right? So let me ask a different question. In 3 years, in 5 years, if OpenAI is something totally different than it is now, it's bought. If OpenAI doesn't make it or is sold off or whatever happens, maybe it's the king, but let's say it doesn't. Will the stock market be okay? How much, if anything, is riding on OpenAI, given that it's kind of a black box, kind of a closed thing? It's not a public company. We don't know a lot about it.
A ton's riding on it because you know that they've made $1.4 trillion in commitments over 8 years, and they're going to lose money all the way through 2029, and the burns are going to get worse every year that passes until then. So, yeah, a lot is riding on it, but you're seeing the stock market, as I said, it's been adapting to this since late October. What I find fascinating today is you look at Oracle, right? Because they're obviously, when they announced that monster quarter back in September of last year, the stock was up 36% the next day. Biggest move in history for any company with a market cap of over $500 billion. But $300 billion, or almost 2/3 of the remaining performance obligations, were from OpenAI. So Oracle comes out this morning, says, hey, we're going to raise $50 billion, half of it in equity, stocks up, and now it's down. And so it tells you that people are thinking maybe a little bit beyond, okay, they can raise it for this year, but what about next year and the year after? And so it's never the data, it's how the market reacts to the data. Clearly this morning it was, oh my God, this is great. And now it's like, well, wait a minute. We still have the same problem we had before, which is their exposure to OpenAI.
Ways the excitement that the hyperscalers had kind of got away from them a little bit, and it's starting to face reality. So there's two big things. So let's take the Oracle announcement today. I understand that if they believe that they have customers for the cloud services and they need more, CapEx to be able to then build it and sell it, that makes sense as a business. But it still fundamentally depends on the model of we need generative AI powered by incredibly powerful, incredibly expensive, incredibly energy intensive chips made by companies like Nvidia or ADM, and that to be put in data centers that will use incredible amounts of energy. And all of this is both necessary and will happen. And I think what we're starting to see is neither of those are good assumptions. So on the economic side, like, yes, the potential for AI is great, but do you know what OpenAI and Claude are going to make this year in terms of revenue? Combined, $30 billion is the projections, 35 if you're being generous. That's minuscule. Now, I understand that at the beginning of any major economic transformation in an industry, the numbers are very small at the beginning and very big later on. As a venture capitalist, like, that's literally what we invest in. However, given the amount of debt being taken on here, you have to really believe that demand for those services are going to be there. And I will tell you, it's like this morning, I was running kind of a math question, modeling out our fund and some different questions that I want to know about ways to take equity from our portfolio companies. And the same question, which had about 15 different variables, to 5 different AI platforms: OpenAI, Grok, Claude, Gemini, Perplexity. And the product I got back was really subpar. So yes, it was faster than if an analyst did all of it for me on paper. But Claude doubled the amount of equity that I told them we would have. So it looked great on paper, but it wasn't actually right in terms of the amount of money we would make. OpenAI literally forgot to account for equity. So I'm not sure they have a product really worth selling to justify all this debt and all this investment. Right. Maybe that's different in B2B. But then the other thing is politically, we're starting to see all over the country from both parties huge revolts from elected officials saying, we're not going to give you the permitting and zoning that you need to build your data centers because your plan for doing so just makes all of the other ratepayers for the local utility, i.e. voters, have to pay 30, 40, 50% more, whether it's a normal human being or a politician. No one's looking to pay a lot more money or sacrifice their political career.
Hey guys, welcome back to my channel. I hope you all are doing well today. So without wasting your time, let's start our video. A quiet but extremely important development is unfolding in the AI world. Report confirmed that Jensen Huang, CEO of Nvidia, is planning to visit China at the moment when AI chips sit at the center of global politics, economics, and the technological power. This is not a routine business trip; it's a strategic signal. China remains one of the Nvidia largest potential AI market. Despite the US exports control, the Chinese tech firm continue to demand high-performance AI chips, not for speculation but for the real deployment in data centers, cloud platforms, and the consumer-facing AI products. What makes this moment different is that the China needs Nvidia ecosystem, even if it doesn't get Nvidia's most advanced chips. That reality gives Nvidia leverage and give the trip meaning. Recent reports suggest Chinese regulators are following large tech firms, including Alibaba Group, Tencent, and the ByteDance, to prepare order for Nvidia H200 AI chips. Let's be clear, the H200 is not the Nvidia most advanced chips. It is not the cutting-edge Vera Rubin platform, but it is good enough to power the large-scale AI workloads. And that's the key point. China does not need the best chips. It needs the reliable and scalable one. If this news is real, why did Nvidia stock explode? Because Wall Street has learned to be cautious. Analysts are deliberately not baking the China revenue into the models yet. And for the good reason, approval can be reversed, condition can be changed overnight, and geopolitics can override the economics. Until chips physically ship and the revenue shows up in earnings, China remains upside opportunity, not for a base case assumption.